Hello, and what is happening? So the Canadian dollar is plunging, and it's not just a story of the US dollar like the mainstream media would have you believe. And really, that's just the financial media, because the reality is nobody is really reporting on what is going on with these currencies, and it's all the Western basket of currencies. It's your Japanese yen, your Canadian dollar, your Aussie dollar, your New Zealand dollar, your pound, your euro. These are the currencies that are currently in a meltdown. And nobody is talking about this. And this is just insane because this affects everything, especially for a country like Canada, which imports a heck of a lot of stuff from the United States, and it has to pay in, you guessed it, US dollars. So one thing, obviously I did that video last week. If you haven't seen it, check it out. But this week I want to take a little bit of a different dive into it by showing you a different side to the argument, which isn't it's just a US dollar story. So without further ado, I'm going to bring up this chart here, which is the Canadian dollar versus the Mexican peso. Now, as you can see, there was a spike upwards there, which happened during 2020. And that is the typical response pre-cerveza sickness to a crisis that would happen. Mexico is an emerging market as such, but these type of currencies would always sell off in the face of that, and that's why you see that massive spike upwards. But we have changed. We have turned a corner completely in this debt-driven disaster that has been created by central planners and the government, the authoritarians, everybody in the central banks. They have created this absolute disaster. And if you look at that chart, you can see the opposite response is happening right now to what happened in 2020. So it's like a reverse of what happened in 2020. Now, the currencies like the Canadian dollar, the Aussie dollar, the New Zealand dollar, the pound, they're getting treated like the emerging markets did because the countries are failing and people just can't get it in their head. One day people are going to wake up. I know one day people are going to wake up. But these countries are failing. They're failing bad, and they're failing because of the amount of debt in the system. And people aren't stupid. People outside of the central planners and who are actually investing in different currencies, different businesses in these countries, they know they can do a case study and they can see that everybody is highly indebted. All you have to do is go to trading economics, look at household debt, look at private debt, and you know that Canada is a terrible country to put your money in, despite the Canadian dollar being down, because obviously as a currency gets cheaper, that could attract investment, and it has done in the past, actually. In fact, many years ago in the 70s and the 80s, when currencies went down, especially like the pound in the late 80s, when the pound sold off completely and it went down to the level it actually got to just a couple of weeks ago, there was massive investment into the UK. It started a huge boom in the economy because pounds were cheap. People weren't indebted like they are right now. So that was a great market to build a business. But now you got the complete reverse of that. It's looking like a better economy in Mexico than it looks like in Canada. And that really tells the story of debt. Because what we've had is just these short-term fixes come from central planners, people like Justin Trudeau, people like Jagmeet Singh, even people like Stephen Harper, people like Biden, Trump. They all do the same thing. They all come in and say, we're doing this thing new, but it's always this short-term view. And it leads to just kicking the can down the road. And kicking the can down the road just means to people's debt spiraling out of control. And the amount of debt that people are carrying is ridiculous. And we're going to cover a story in a couple of days, possibly when I get back, because I mean, I need to compose myself for it because it's impossible not to burst out laughing. But legitimately right now, we have viewers from all over the world on this channel. And legitimately right now, you have people in Canada who are protesting, get this right, protesting because interest rates are going up. Now, they have no clue about anything. And I'm not going to go off on a wild tangent on this because a whole video needs to be reserved to what's going on there. But that just shows you the level of ignorance and arrogance that has been built up, just numbing people to the reality of what's going on. And another thing is the stock market. Look at the stock market. It just trades on what the Fed is going to do. In fact, that's globally. That's economies, even the TSX here in Canada is just trading on what central banks are going to do. It doesn't matter if you go out there and invest in a great company that is growing, because the reality is people don't care. They only care about where interest rates are going, and that's because everybody is in so much debt. And you look at what's happening with the Bank of England. Third QE attempt. They are just full on. They're not hiding it. We're just going to devalue the currency. Jobs are good. And you know what? I remember going to the US back in 2012, 2013, whenever it was, when I lived in the UK. And I was getting like $1.80 for every pound. And now you're getting $1.10. And the reality is you're getting less than that if you're getting physical cash. So just think about how much that has been devalued. And eventually the US dollar is going to end up in the same place as the pound, where it just goes down and down and down and down. And it doesn't happen quickly. I remember my grandfather saying to me, Luke, when I used to go to America, we could get $2.20. We could get $2.30 US for every pound. And it just goes down and down and down. And the same thing is going to happen with the Canadian dollar. Little do people realize it. Now, that doesn't mean that it's not going to go down in a straight line, as you can see on this chart right here. This is the perfect example of that. You had it go up and it's coming back down. But the trend is changing. Definitely looks like a top has been formed there. You got a double top and it's coming back down. But the thing is, which I don't think people really understand, is I'm not saying that this is just going to collapse overnight. That's not what I'm saying. I'm saying that in 10 years' time, it could be 50 cents to the US dollar could be the norm. It could be 40 cents to the US dollar could be the norm. And within that, you're going to have it go up, where it might go to 80 cents and then go down. And then the next time it goes up, it might only go up to 70 cents. And that's what we've been seeing. It's been in this long-term downtrend against the US dollar, and that's not going to change because the Canadian economy is a disaster. It's a total train wreck of an economy. I mean, where I'm sat right now is in this really beautiful area in British Columbia, and a 1,400 square foot house will cost you $850,000. Packed full of retired people who live here because the weather is very warm, comparable to most places in Canada. I wouldn't say it's that warm. But anyway, everywhere you go, there are labor shortages. They cannot get people to work. And that is because they've driven up the cost of living to an insane level. And this is how you're getting to this turning point now where things cannot continue. This can't sustain itself. Are you kidding me? $850,000. And $850,000, 150 days on the market, some of these houses. So they're not selling. Nobody's buying them anymore. And you know what? It's just kind of crazy to me how that happens. And I know I've kind of gone on a wild tangent there. Sorry about that. But anyway, you look at this chart and what do you see? You see it spikes up, comes back down. So let's have a look at Mexico and Canada. This is a chart from Visual Capitalist. They put some great stuff out. You've got imports into the US from Canada of $357 billion and Mexico $384 billion. You can also see that they're exporting less to Mexico and Canada is actually importing little bit less than they export, but not far away from the same. But Mexico is substantially less. It's about 30% less. So Mexico has a distinct advantage as in it's exporting a lot to the US. It's exporting way more than it imports and depends on the US. So that is one thing to note. But they're very similar in the amounts they're exporting there to the United States, Canada, and Mexico. That's why I thought they were the perfect comparison for this. So why would the Mexican peso be going up against the Canadian dollar? And it really comes down to this. So the Mexican inflation rate is running at 8.7%. This is trading economics. And you can see there 8.7%. If we go over to Canada, inflation's running at 7%. That's a total lie, as we know. I mean, most of these CPIs. But let's call it that they're both the same, because near enough they're going to be the same. The Mexico interest rate right now is at 9.25%. What's the Canadian interest rate at? 3.25%. And people are protesting right now. They're protesting about interest rates. In Mexico, interest rates are at 9.25%. People aren't protesting about interest rates in Mexico. That shows you the end. And that really shows you how people have just been brainwashed into this reality in places like Canada, in the US, the UK, all these countries, that they can get into debt and there is zero consequences for that. And now the rubber has met the road with the inflation that we're getting. And a lot of people don't know how that global inflation is being caused. And a lot of it is supply chain related. Another is just the fact that the demand got so high because of all the stimmy checks that kind of created all these massive distortions in different economies and created a global inflation problem. But the thing is, central banks are ill-equipped to deal with that problem here in Canada, in the US, in the UK, and everywhere else. They cannot get the interest rates up to where places like Mexico can get the interest rates up. And that really makes Mexico a better place to go invest your money, because Mexico is going to grow more of a middle class over the next 10 years than a place like Canada. And people don't understand that. And I'm putting our money to work in Mexico. That's one of the reasons we're going to be investing in Mexico, because it's noticing these tiny nuances that mean a lot. And it's really the markets have flipped back to the 1970s type of trading. And the only thing you haven't seen yet is pivots, and then when silver and gold explodes and all that stuff kind of happens. But and it may not happen, obviously, of course, as well. It's not investment advice. But this is the way things are going right now. And, you know, once upon a time, the Western countries would have been able to get rates up to 9.25%. They did during the 1970s. Ask yourself this, is that possible right now? No way. That could not happen. So if that can't happen, why can't that happen? And essentially, if it can't happen, what does that mean? And that, once you follow those questions onwards, you really realize that you're at a dead end in terms of what they can do. And essentially, it's going to mean the end of these currencies. And it's going to be a slow ending. I don't think it's going to be a hyperinflation. I mean, it could, the way England's going. And don't you believe, like, Canada is following behind England, and Australia and New Zealand? They've all got big problems. They all have massive problems. So just think about it, because this is huge, in my opinion, seeing these divergences. And Mexico isn't really like an emerging market. It's pretty unique in the fact that it's actually got a very good, big economy that exports a lot of stuff to the US, which is a great trading partner to have because they have the reserve currency and they can just print. They will be the last country to go because they can just print and hand out stimmy checks like they did in 2020. And the thing is, Canada can't do that, neither can England, without severe consequences. And you can see those severe consequences happening right now in the UK. And just because they come out and they say, oh, we're doing QE. Okay, they're doing that in England, and look what's happening. The currency. Look what's happening to the gilts. They can't control the yield on the long end. They're there trying to control the long end of the curve, and they can't control it. It's heading upward to 5% despite their buying. It just shows you how large the amount of selling pressure that is happening in the UK of these gilts. People want to get out of them. So there's major problems. People don't realize what they're wishing for when they're at these protests, but they've been brainwashed and manipulated to believe that this free money world will last forever, and they believe that the economy is good. They didn't realize that the economy is nothing. It's just a skeleton. It's a skeleton that is put on a king's outfit. That's such a bad metaphor. But anyway, so this is where we're at right now. I think it's a total train wreck. I think this Canadian dollar, I think in 10 years we'll be looking at this and we'll be saying, wow, I wish we bought US dollars. And I'm not saying go out and buy US dollars because it will go up and down within this range. This is what I'm trying to say. However, long term, the Canadian dollar is going down. It's going down against gold. It's going down against silver. It's going down against all commodities. And it will go down against the US dollar. And the US dollar will be the last shoe to drop in this situation. So anyway, I thank you so much for watching. Maybe check out that video. Wherever it is. And I'll see you in the next one. Take care of yourselves, guys. Bye-bye.